Greetings to all. My name is Rohit and I have chosen problem 1, that is real estate tokenization for the capstone project. First, a very brief background on the global commercial real estate investment market. The size of the market was estimated to be more than US 800 billion in 2019. Real estate is a relatively illiquid asset class, requires significant investment, and the process is known to be lengthy and cumbersome. However, it has also provided consistently superior returns, and there is a very good investor appetite around the globe. Of course, that was pre-pandemic. In near future, we'll have to wait and see how things pan out. So as things stand, this market is ripe for disruption. So what is tokenization? As we saw in the problem statement, newer technology firms like BlockSquare are ready to change real estate investment through tokenization. So tokenization is the process of issuing a blockchain token that represents a fractional share in real tradable asset. And there are several benefits to it. First and foremost is that the ownership can be fractionalized and therefore reduce upfront capital commitment from the investors. This can help property management firms tap a wider pool of investors. Smart contracts, which are programmable actions on blockchain that can help automate several processes like KYC, dividend distribution, and will bring operational efficiency and reduce costs. Blockchains, as we are aware, is a distributed ledger technology known for its immutability and thus will be more secure than a centralized database. And lastly, this will provide secondary liquidity to the market by allowing trading on exchanges. So, why should a firm like Roots go ahead with implementing this tokenization? We expect this to be advantageous to the property management firms in the long run as technology slowly gets wider adoption and for several benefits discussed in the previous slides. Being an early mover would also be a plus. So now how? We recommend starting with a pilot project to identify and tokenize one property under management. While setting up this pilot project, we would recommend investing in a scalable process, and so if the project is deemed to be a success, wider adoption would be easier. So implementing real estate tokenization, we have identified 5 steps, and we'll discuss it one by one. First, partnership and platform integration. In this, the property management firm should identify and partner with a technology firm giving full suite of services in the life cycle of tokenization. Providers like BlockSquare can be especially useful as they provide APIs which can be easily integrated into the property management firm's website. So as per us, there are 4 stages of any tokenization. Digitization, which is defining and uploading security terms on blockchain and encoding with smart contracts. Distribution to investor, that is the issuance of tokens to investors in exchange of capital. Post-tokenization management activities involve corporate action management like rental yield distribution, shareholder voting, which can be automated by smart contracts. Post-tokenization activities will continue throughout the life of the token. And the final stage is secondary trading. This is where the token holder can trade token with another investor, either OTC or on an exchange. The second is governance. The regulatory and legal guidelines around tokenization are still uncertain and in development phase. In absence of any clear guidelines, the relevant country's security laws are expected to apply on blockchain. To apply for tokenization. Therefore, it is imperative that the firms seek advice on legal, regulatory, compliance, and taxation matters. The key areas to focus are due diligence, establishing legal rights of token owners, KYC of investors, and compliance with regulatory requirements, accounting, taxation, etc. of course are very important. The next step in tokenization would be property identification. Tokenization can either be done for a single property or a portfolio of properties. Things to consider while identifying property is determining the correct valuation. Tokenization is expected to enhance valuation in the long run by providing access to more liquidity and a broader pool of investors. The property should have decent demand and should be investable. We suggest establishing a SPV for holding and managing the property, as once the property is tokenized, the investors would be distributed across. We also recommend working with an anchor investor in the earlier stages, as it will demonstrate demand and give confidence to smaller investors. Issuance of tokens and providing post-tokenization services. Once the tokens are issued, the firm should collaborate with the technology provider to provide post-tokenization services. We have already discussed what such services would entail. Compared to a traditional security offering or a property REIT, post-issuance services on blockchain are automated and less expensive. Also, providing end-to-end services will help build strong relationships with investors. Secondary trading can be facilitated by integrating with some exchanges working on this front. So once the process is complete, that is the tokenization, the firm can analyze and compare the results of tokenization with standard offering to determine areas of improvement. If the offering is deemed successful, other properties can be explored for tokenization. So what do we aim to achieve from this strategy? Build an easily scalable process, achieve reduction in operational cost for the firm by automating several processes and reducing duplication of efforts, gain a wider investor pool to add more liquidity, quick turnaround, less documentation requirements, secure and verifiable records on blockchain, and secondary market trading opportunities for investors. And what are the potential risks to this strategy and tokenization as a whole? As we have seen through the coursework, there is considerable legal and regulatory uncertainty. This is true for all newer technologies. Regulations take time to catch up. So we may see slower adoption and less appetite at the moment as investors wait for regulations to develop. We may therefore see lack of institutional investors, which in my opinion would be important for the market to grow big. However, as markets develop, regulations will catch up and wider adoption will follow. Thank you.